Liebe Zuschauer, ganz herzlich willkommen zu Inside Wall Street aus dem Studio der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist Peter Cardillo, der Chefökonom von Rockwell Global Capital. Thanks you so much for joining us, Peter.
Nice to be back.
Peter, we see the markets at the moment, sometimes going up, going down. On Thursday we saw a huge reaction because the market was hopeful that there is a maybe temporary solution, at least in Washington.
Yeah, I think it's coming. I certainly don't subscribe to the fact that we'll have a default or a technical default. The risks are great, and I think that everyone really realizes that. And of course, this past several days we've had a lot of movement in Washington. And so I think we're getting close to a resolution as far as the debt ceiling is concerned. And as far as the budget is concerned, I mean, that probably could linger. For the past 4 or 5 years, we haven't really had a budget. Again, I think, that government employees will probably be back on the job within a short period of time.
Do you think when this government shutdown will continue for more days and weeks, maybe we will see a bigger impact on the U.S. economy?
Right now, the impact is probably minimal. We're looking maybe at a 1 or 0.2% decline from gross domestic product. But in general, if we were to continue, which I don't think we will, but if this were to drag on, the government shut down for, let's say, 3 or 4 weeks, then we could be looking at maybe 25 or 0.5% shave off of economic activity. And that obviously would mean slower growth. But that, of course, that would probably mean that expectations for a pullback in the bond buying program in December would be extended perhaps to the latter part of the first or second quarter of the new year.
The Republicans always like to talk about the Obamacare. Obama does not want to negotiate that. Do you think there will a negotiation coming?
Look, what they say publicly is one thing, and what they say behind doors is another. And just like, there are some members of Congress, of the GOP, who think that a default would not be all that detrimental to the economy, at least to say to the stock market, to the markets in general, I should say. But of course, I think that we all know that that's not the case. We know that even a technical default would be very harmful in terms of the creditness worthy of the United States, and certainly we probably would get a downgrade by the rating agencies, and we know what happened last time around. So, I think it's just political rhetoric. It's a way of the politicians wanting to get a message across, but unfortunately, that type of rhetoric can be damaging.
You already mentioned the Fed, and we will see a new Fed chairman soon, and it's a woman, Janet Yellen. What do you expect of her maybe policy in the future?
I think she's going to continue on with easy money for, 2 days ago we had the results of the FOMC meetings, and certainly there were no indications in there. In fact, maybe they were a little bit more on the hawkish side than we were expecting, which means that we're probably looking at a December trimming of the bond buying program. But again, a lot depends on the government shutdown. But I think she's known as a dove, and I think she will continue to explore every avenue that's possible to get full employment back on track. So, which means easy money policy.
And money is also another point. We will see the earnings season now really starting. What do you expect? Maybe the revenue side not that strong?
Oh, absolutely. I think we're going to be looking at a decline in revenue growth, but bottom lines should beat market expectations. It does raise the issue of what type of earnings we're looking at, the quality of earnings, but the bottom line is if the majority of companies do beat market expectations, which I expect them to, the end results that it's not going to be negative for the stock market.
So how should an investor react at the moment? We see so much uncertainty, volatility.
Well, I've been saying that investors should stay the course and buy the dips. I think the dips offer entry points. We still have to see what the major corporations are going to tell us about their quarter, and of course we'll be looking at very closely at the multinational corporations.
Peter Cardillo of Rockwell Global Capital. Thank you so much for joining us today. Und Ihnen, liebe Zuschauer, vielen Dank fürs Zuschauen. Wir sehen uns in der kommenden Woche wieder bei Inside Wall Street und mehr Informationen finden Sie auch noch auf unserer Webseite www.drf.fm.